Morning, everybody. As Jay mentioned, I'm Peter Spina, the president of GoldSeek and SilverSeek.com. I have been involved with crypto, but for the last 2.5 decades, since an early teenager, I've been investing in precious metals and in precious metal stocks, mostly into junior and to mid-tier companies. So it's a pleasure to have some of the 3 top mining executives here on stage with me today. It's 3 individuals I have invested and followed for many years and have done well as an investor in their companies. So to start off, I think the most burning question on investors' minds today, and you hear this in the last day here at the conference, should we be selling our gold and silver and buying crypto? Should we be getting to the stock market? Or does gold and silver, when does the excitement return to gold and silver? Because right now, you see the stock market hasn't been more than 3% from the peak in the last year. There's no momentum in the sector. When is it going to return, and where do you see the precious metal sector right now? We'll start off with you, Keith.
Okay. That was an introduction.
You want to start with me?
Sure.
The bull market started again, and I've been saying that for over a year now. But it's tough. We came out of the 5-year bear market that the miners really struggled through, including First Majestic. Our costs were twice what they are today. And then all of a sudden, January 2016 comes along, and I remember that month alone, First Majestic was down 24%. And then all of a sudden, things changed, and the metal price took off, and some of the equities, First Majestic was up 500% within about 6 or 7 months, and you couldn't buy the stock because it was just going up so quickly every single day. That's what happens in this sector, and you have to be prepared to be wrong. And I can't stress that enough, because when this market changes, it changes like a light. And I'm in the market now. I'm buying stock because I think the valuations are just amazing. What we're seeing right now, where the mining sector is currently on sale. As long as the S&P and the NASDAQ continually hit new highs, it's going to continue that way. I don't think we necessarily need a crash in the market, but we need to see the institutions come back into the space, because the institutions just simply aren't there. It's you people in this room who are the sticky retail investors who are in this market. But until the institutions come back, this market cannot go higher, and the institutions aren't going to come into this market until they see it start to move, and possibly the bigger markets start to correct.
Rob, what will it take the institutions to get interested again in this sector? What will be the motivation, and what do you see in maybe timing in this? Is this an emerging bull market, do you believe, or where are we?
Peter, I believe you have to take a longer time horizon perspective. Mm-hmm. If you go back to 2001, which was a low, and come forward in gold, it's outperformed almost every asset class since 2001 to present. It's averaged up better than 10% a year over that period, despite some very large corrections. So it's performing a function that it's been used for historically, and that's a store of value. It does depend when you enter, so if you entered in 2011, you're feeling a lot of pain. But I saw something recently. If you go back to 2001, to 2004, 2005, the price of gold was going up largely in dollar terms, but not in the other major currencies. It was post-2004 that all of a sudden all the other major currencies started climbing. The price of gold started climbing in their currencies. And then we had a strong bull market. Right now we have the reverse of that. If you look at a trade-weighted average of currencies, the other currencies, gold's not too far off its all-time highs that were achieved in 2011. But it's down quite a bit in dollar terms, and if you look at the charts, you can see it bottoming right now and starting to ascend. So I just see a little more time. We're going to see quite a strong market coming.
Okay. Peter, you focus a lot on silver. Where do you see silver in the coming few years? Do you believe that we've bottomed out in the price, or are we still just kind of bottoming out, or where are we right now with the silver market?
Well, I think I'd echo a a lot of what Rob said in terms of taking a long-term view. When we started MAG, it was 2002, and silver was under $5 an ounce, and 17 is actually not that bad a silver price in the current perspective. There's a lot of silver going into a lot of industrial products. There's a lot of demand for it for biomedicals. And I think you do the same thing that you always do, which is you go for high quality, large, long-term deposits so that you make money when the market is the way it is now. And then when the market is higher, you're very happy. And I'm not particularly good at timing the market, as my broker will tell you. So that's what I do. I resort to quality.
Okay. So, regards to quality, this is part of the emerging bull market. Where are the opportunities in the sector? Do you stick with the producers? Do you focus investing in the producing companies, exploration? Where are the opportunities in the coming year, 2, 3 ahead? I'll just continue with you, Peter.
Well, I'll continue with exactly where I was. Look for outfits that have high-grade assets with a long-term, that are making good money now, high IRR opportunities with a good long life cycle, strong resources that will last and seem I mean, everything's underpriced right now. The plug got pulled out of the bathtub, so everything's on the bottom. The question is, how do you pick out the best pieces? And the best pieces are the ones that have the strongest assets.
Okay.
Peter, I'd be looking for, I'd look at first what's happened to the capital markets. They've changed dramatically in the last 10 years with the advent of more and more index funds and ETFs. So there is institutional investment in the market, and that's in the form of ETFs. But they have a minimum threshold in terms of market capitalization before they buy a stock. So what we're looking at is in the broad market, where the institutions are going and the passive investors, they're going to the larger cap stocks. Now, if you want to play individual stocks, which I think are better, I mean, it's probably a good mix to have some ETFs and some individual stocks. The seniors loaded up with debt. They've tried to reduce their debt. They've gotten rid of their production growth, and now they're looking to buy growth. And we've seen evidence of them reaching down beyond, through the mid-tier into the juniors. To me, the space to be in is the intermediates, because I think they have a stronger growth curve. Okay. If you want to look for imperfect markets, you'll want to go into the juniors, but they don't have the volume right now. And so you might get stuck if you're taking a large position.
Keith, you have First Majestic, a primary silver producer, but you also have a company called First Mining Finance, and you've been accumulating a lot of resources in this company. So you're taking an approach that we're going to be going into another cycle where these larger companies, or in general, the exploration of this sector has been horrible. There hasn't been a lot of discoveries. There hasn't been a lot of investment in finding new deposits. So is this a good strategy for mining companies to be buying out smaller companies out or other projects before the sector really revives? Is this as an investor who has started off in the mid-90s, there was companies like Allied Nevada, Silver Standard, and they took the similar approach and did very well once the market took off. So you're looking for a similar situation in the next year?
Well, just to continue on with the discussion that started here, I like development projects. I'm not a geologist. Exploration to me, I find a little bit too risky. So I like to go into projects or assets or companies that have advanced stage projects that I could look at and see that there's actually ounces in the ground. And I could see a light at the end of the tunnel where that asset can actually see production. Because I think that's where the big growth is from the development to the producer. Some people that have higher risk tolerances may want to go into some of the junior exploration companies, but you have to be aware that that's a very risky market. I put First Mining together because I wanted to accumulate a portfolio of development assets. And I think First Mining's got one of the best gold development portfolios there is in the world. And so that company is going to spend the next couple of years advancing and de-risking those assets and proving to the marketplace that that portfolio can actually be producing assets. And when I put First Majestic together, First Quantum together, same type of business plan. Get development assets and bring them into production.
Okay. Now, on the production side, on the metal side, focus here on silver, also gold and copper. Of the various metals, and we see it with like the price of zinc and other copper, they're taking off, and silver's been kind of lagging. And which of these metals in the year or two ahead are you looking outside of just precious metals into other metals, or is your primary focus going to remain on precious metals? I'll start with you, Peter.
That's a very good question. One of the beauties of working with silver is, although you can focus on the silver product of the mine, silver almost never travels by itself. So silver is commonly found with gold, lead, zinc, copper. So a polymetallic approach makes a lot of sense, because right now, for example, with what we have at Juanicipio, we just came out with a new PEA last week. We've got a couple of 100 million ounces of silver. We've also got 1.5 billion pounds of zinc, which a few years ago, when zinc was 44 cents a pound, nobody would have cared about. But at $1.44, that starts, 100 million here, billion there, that you're starting to talk real money. So there's a lot of that out there, and there's been a real tendency in the marketing of companies over the last 20 years to focus on a single metal. They present themselves as a silver company, a gold company, or whatever, and they reformulate everything as equivalent ounces. But the fact is, the metals aren't equivalent. They're not marketed the same, they're not recovered the same. So a lot of these companies probably have good base metal credits that are being presented in another way because they think the market is single-minded in terms of the only metal that they want to focus on. And I think there's probably a lot of opportunity there. I would come back and answer Keith to a certain point, though, that the world can only cannibalize existing properties and companies so long that if you don't feed the exploration beast at the front end, and yes, it's a risky business, but if we don't go out and use new techniques and new understanding of the world to make new discoveries, we're going to, that's a beast that's eating its own tail, and you can only do that for so long. And the majors recognize it, and I think that's why they're doing what Rob is saying, that they're reaching down and picking some of the things where their people who are very competent think they're seeing much more opportunity for the deposits to be much bigger. And nobody's making discoveries now because no one's investing in exploration drilling. So if you don't invest, you won't find. So there's a good moment for exploration to take off again.
On that, Peter, if you look and compare the Goldman Sachs Commodity Index to the S&P 500 right now, commodities are at one of the lowest points they've been since 1925. So the downside risk of getting involved in some of the commodities, any of the metals, I think is extremely low, and the upside's quite exciting. This is a question of time. For me, I've always been involved with gold, and then more recently, after forming McEwen Mining, we ended up with some silver, and we also have a very large copper deposit, 30 billion pounds of copper. And it's really, can you take those assets and make money with them? I do believe that gold and silver, because of their historical role as monetary metals and reserve currency, that's an important place to be. And I wouldn't forget about that in the case of an economic downturn, that people will go back to looking at that. And you're seeing China and Russia right now adding to their gold reserves, which I believe is an attempt to displace the dollar as a reserve currency in the world, to stand out and say, we have a currency now that's backed by gold.
Keith, on the subject of Goldman Sachs, they had a report out recently talking about a new commodity super cycle. So is this coming bull market in precious metals also going to coincide with commodities also rising? Is everything going to be rising together? Or?
Well, the mining sector is very cyclical. We all know that. It's a very start and stop type of business. You know, in a high metal price environment, which we saw, you know, in 2010 through 2012, the miners overproduced and flooded the market with metals. And then now the miners are underproducing, where we're actually seeing deficits in most of the metals worldwide. And that's going to affect price. And that's why I'm so excited about where we are in this current cycle, is because it's not very often that you can actually start deploying capital at this point in the cycle, because we're in the early stages of the next bull market, which could go, you know, I don't have a crystal ball, but it could be another 5 or 10 year bull market. And you never know when it's going to all of a sudden start. But we're there now today, and we're seeing zinc supplies, copper supplies, silver supplies dropping globally, and it's going to take higher prices in order for the miners to start ramping up production again. And it will happen, but again, there's a delay. So, you know, that's why it's so important to be in this market at the beginning of the cycle.
Okay, looking at this starting of the bull market and acquiring other assets, what's the situation like, or the environment for access to capital? Is it easier in the last couple of years if a producer, or you're looking for capital in the markets right now, and what different sources? I heard yesterday that there's more competition from the royalty companies now, that their terms are getting more competitive because there's more capital out there. So if you were to make an acquisition or invest more into growth, what are the capital markets like right now?
There's an evil vehicle out there. It's called royalties and metal streams and hedging. If you own one of those companies, I think you've done well. But those companies have come out and spoke to producers, explorers, and said, here, we'll give you some money. But what we're going to do is take part of your revenue stream, and management comes back and says, well, you know, it's just a little bit of revenue stream. But in a down market, that little bit of revenue stream is a profit margin. And the reason the royalty companies and the metal streamers have done so well is because they took the profit margin right out of the industry. And there's been very little discipline in the industry to say, no, I don't need that money right now. Metal prices are low. My resources aren't going away. I can wait and build it when there's a better metal price, which is going to come back. But certainly with the capital markets returning, there is more competition in terms of the metal streamers and the royalties. They're flush with cash, but they have to compete now. From 2012 to 2015, they had the game all to themselves. And so I'm very anti those, because I think they stole from the industry, took the appeal of the market away.
And you see that mentioned, Frank Holmes just talked about how well the royalty companies have done. Can producers in this next cycle outperform the royalty companies? Do you see them as the continued outperformers in the sector, or are the mining companies producers?
The mining companies are going to outperform.
This cycle? Okay.
Definitely.
Okay. Would you like to?
I mean, they haven't taken only the profit margin, they've taken your future profit margin and the blue sky away from your properties. Mm-hmm. So if you have a property that you think is going to get a lot bigger and you've sold a significant piece of that forward for whatever the price is, you will pay for that for the life of your company.
You've seen some very, very clear examples of what can go wrong with a royalty or a stream.
Yeah.
Primero would be one of those, which was $8 in 2014. It's trading at 9 cents today. It's got, that stream took a large part of their revenue. They had to go out and borrow, and they just got pushed against the wall. And we've seen a number of examples like that. I'd caution, I mean, I just bought a property in McEwen mining that has a stream on it, which it was already there. But you know, you're starting to look around and say, where can you go to source other sources of gold to put through your mill, so it doesn't have to be exposed to that stream? And if you're an investor, I would advise you to look very closely at the financials of the company and where do they access their capital and what strings are attached to their revenue stream. because it can come as quite a surprise when the price is going up and they're losing it. I mean, in the case of Primero, they were selling silver at $4 an ounce. And the Mexican government came along and said, that's not going to work. We're going to tax you on the spot price of 17, so you have to pay tax on 13 more dollars you didn't realize.
Keith, what's your view of royalties? And I don't believe you have any royalties on your projects, or
We have a small royalty with Sandstorm on an asset, the Santa Elena mine. When we took that out, that was there prior to us buying it. I'm in the same camp as Rob. Unfortunately, I think the multiples that we see in the mining sector are low because of the royalty companies. I think that, as already been said on this panel, they've taken away the profits from the sector, and it's always life of mine as well, which even makes it more challenging. So, if you make a discovery on your property, the royalty company will actually get a benefit of your discovery, which even makes it more challenging. So it almost dissuades the mining company that owns that asset from doing development and doing exploration, which ultimately hurts the asset. And in the case of San Dimas, Rob's example about Primero, they have no incentive to do any development or exploration, and that's what's killing that asset, unfortunately.
Okay, in the last several minutes here, I'd like to ask you about your companies, and Keith, I'll stick with you. In the coming year or two, what can investors look forward to with First Majestic? What are some key milestones? What's your most interesting, most exciting?
Sure. I love talking about First Majestic. Look, the mining sector, as I said earlier, has come through a 5-year bear market that ended in 2016. We've cut our costs down by 50%, which is obviously a great thing through innovation, through technology. Yet we've got a number of new technologies that we're adopting throughout our mills over the next 2 years. We're just doing budgeting right now for 2018 and looking beyond 2018. And there's a lot of really exciting things happening in the mining sector as a whole. The miners have been forced to take on technology, which is quite unusual because a lot of the technologies that we use in our company and throughout the industry are 100-year-old technologies. And there's been very little innovation in the mining sector. And some leaders out there like Teck and Goldcorp and First Quantum, they're at the cutting edge of some pretty exciting things that's changing this industry. And we're adopting several technologies ourselves, and I'm very excited about what's going to happen over the next couple of years. We're going to keep grinding our costs down. Even though I'm a bull on the metals, I think silver and gold will be going much higher over the next couple of years. We can't be assured that. So the only thing we have control over is our costs. And that's what we're focusing on, and we're going to continually improve our business and grow the business as well through higher recoveries and more efficient throughputs, and I think that's what's going to happen. So we're going to almost get a double whammy in a way, with higher rising metal prices and improving costs. I'm pretty optimistic about the future of First Majestic.
Excellent. Rob, what can we look forward to in the year or two ahead with McEwen Mining?
Well, I'd like to start by saying I got into the gold industry and built a company called Goldcorp, and over 19 years I was the largest individual shareholder of that company. And I stepped away from that. We had a great run for our shareholders and myself, and I said I'd like to take the model a little further. I wanted to get closer to our shareholders, and so that I would be making money the same way they do. I've invested $133 million US after tax in my company. I own 24% of the company. I don't take, my salary got increased last year to $1. And I don't take an options or bonuses. My goal is to build a company that qualifies for the S&P 500. And there's something about the S&P 500, there's only one gold stock in it, it's Newmont. It represents 0.2% of the total market capitalization of all the companies in the S&P 500. And I believe there's going to be a shift in sentiment towards precious metals. Now, the interesting thing about the S&P 500 is 99% of all the public precious metal companies in the world can't get into the S&P 500. You have to be an American company to get into the S&P 500. McEwen Mining is a Colorado incorporated company. The one company in there that's currently there enjoys a lower cost of capital and a larger shareholder base and a great deal of liquidity. So over the next 3-4 years, we're going to be looking for acquisitions that we can buy. I tend to favor distress, and add to that to build a profile of both production and exploration. Currently, we don't have any debt. We are listed New York, Toronto, and trade better than 1% of our outstanding shares a day. So very liquid and a very high beta, 2.7. It's one of the highest in the industry.
You operate, or you have production or development in U.S., Canada, Mexico, Argentina. Of these jurisdictions, which one do you find most favorable? Is there?
We got robbed in Mexico 2 years ago.
Yeah.
Insurance covered it. We're just building a mine in Nevada. We just got a permit after 3 years, and it's one of the first permits Nevada's granted in quite a year. So we're quite excited about that. We bought a property in October in Timmins, which is one of the biggest gold mining districts, and I think there's a lot of exploration there. And we're pushing our copper project towards permitting in the next 2 years.
Okay. Peter, this is a precious metals producers panel, so what are you doing up here?
That's a very good question. But Mag Silver finally finds ourselves, we're a developer, and just as of last week, we have a new PEA that came out that shows that by 2020, we should be in production, and by 21 or 22, we should be one of the world's largest silver producers operating off of a very high-grade asset. It's about 550 grams silver plus gold, plus lead, plus zinc, and in our deep zone, plus copper. We will be making better than 44% after-tax IRR for a minimum of 19 years on an asset that will be producing on an average of just under 10 million ounces of silver per year. So I think that's why we're here. For the last 3 years, we've been watching Shotcrete dry as our decline has gotten down to the top of the mineralized zone. And with the discovery that we made in 2015, where we thought we were closing off the vein at depth and it went from 5 to 30 meters wide, we've now got a resource on the deep zone, which is better than 10 million tons in inferred, with very nice silver, gold, lead, zinc, 0.3 copper on top of all of that. Very, very robust economics. Really good upside, being built by the best people in the world to do this in Mexico. Fresnillo PLC, they've built the same mine twice within sight over the last 10 years, and they're moving it forward very nicely. So that's why we're here, and that is the result of a long-term commitment to exploration. This is a deposit that we found literally from the concept, walking on the surface. Took a while to get there, but will be a world-class asset for a long time. Okay,
and you have such an extensive background and time and spent in Mexico. What are your thoughts of Mexico in the coming years as a place to be, working in? There has been in the mainstream media a lot of talk about, with politics, Mexico this, Mexico that, but how is the mining environment there right now?
If you're working in the right part of Mexico, the mining environment is quite favorable. There are some places that are troublesome, and there's places that have been troublesome for a very long time. But if you care about silver, Mexico has produced 25% of all the silver mined in human history. And of the 15 deposits worldwide that have produced better than 1 billion ounces of silver, 8 of them are in Mexico. Add to that the fact that about 75% of the country is covered by recent dirt and young volcanics. And if you understand the underlying geologic framework of the country, the chances of finding additional deposits is very high. It's 99% of the deposits found in Mexico were found in outcrop within 100 years of the Spanish conquest. And it's ridiculous to believe that all the deposits that are there were found. So lots of upside.
Okay, we have 10 seconds left, so last question. If you were to buy a Christmas present for your spouse or your kids, would you buy gold, silver, lead, zinc, uranium, Bitcoin? What?
Silver.
Gold.
Silver.
Okay, great. Well, thank you very much for your time, and look forward to